The tidal wave of AI spending continues. Shares of Alibaba surging this morning after ramping up its AI investment target. And in just 48 hours, OpenAI announcing a buildout equivalent to 17 nuclear reactors, totaling $850 billion in spending. For today's Tech Check, Mackenzie Sagalos asked OpenAI CEO Sam Altman about the increased spend. Mac.
Hey, Leslie. So at roughly $50 billion per gigawatt, OpenAI's projects from just the past 2 days add up to nearly half of the $2 trillion global AI infrastructure surge HSBC now forecasts. The scale is staggering, even for a company raising a record amount of private market cash. I spoke to OpenAI CEO Sam Altman in Abilene, Texas. He called this the largest infrastructure push of the modern internet era and acknowledged that the $850 billion buildout may look scary from the outside, but argued that it's the only way to keep up with demand that's already grown tenfold in the last 18 months.
And this is what it takes to deliver AI. AI, unlike previous technological revolutions or previous versions of the internet, there's so much infrastructure that's required. And this is a small sample of it.
Now, Altman insisted the building boom is in response to soaring demand, noting that OpenAI is growing faster than any business that he's ever heard of. He also pushed back on bubble fears, saying, yes, people will get burned, but every past technological revolution has gone through cycles just like this.
People will get burned on overinvesting, and people will also get burned on underinvesting and not having enough capacity. Smart people will get overexcited, and people will lose a lot of money, people will make a lot of money. But I am confident that long-term, the value of this technology is going to be gigantic to society.
Now, one tech company that could be worried about underinvesting is Alibaba. It just revealed plans to increase its spending on AI models and infrastructure development on top of the $53 billion that it already committed to spending on its big AI push, really underscoring just how global this Gen AI arms race has become. Guys?
Mac, can you remind us just kind of where the arms race sits with regard to U.S. spending versus China? I mean, it sounds like, just based on what the hyperscalers are doing all the way through the supply chain for AI, that the U.S. is well ahead in terms of its spending. And do we even have a clear picture of how much China is spending outside of the $53 billion or so that Alibaba upped its target to today?
So Alibaba is one of those companies that wants to compete both as a hyperscaler, potentially a chip maker, and then it also has its large language models. Part of this announcement was that they would have the latest version of Qwen. That's the name of their LLM. But to your point, how does this spending compare? That's something that they didn't disclose yet, the amount of money that they're going to be adding onto that $53 billion budget. What we do know is that Alibaba is opening new data centers in Brazil, France, and the Netherlands. And part of that has to do with co-location, wanting to be closer to where your end user is so that the models move faster. We also know that in China, Tencent and Baidu have been competing with the model makers, competing with the likes of Anthropic and OpenAI. CEO Eddie Wu of Alibaba really underlining this fact that they want to be more of a player in this hyperscaler competition, be more self-sufficient. And you know what? Nvidia being blocked from selling their chips into the country is really helping them with that ambition.
I'll tell you what's really interesting, Mac, is this. We are clearly in an environment, and you can look at a 5-year of BABA where companies are being rewarded for spending a ton of money, and that gets reflected in what China, a large cap tech, has done versus the S&P.
Well, it's absolutely true. I mean, Alibaba just had its best day. Its shares had its best day in 4 years. I'm looking at the K-Web right here. It's up 3%. Just today, up 46% this year. That is an ETF that tracks China's biggest internet names. And so it is certainly an age where you're putting these blockbuster, multi-billion-dollar deal announcements out there and you're being rewarded in the stock market. Yesterday, I was out in Abilene, Texas, reporting on an expanded infrastructure build between the likes of SoftBank, Oracle, and OpenAI. In the after hours, we saw Nvidia, which is also a part of this, moving higher after selling off during the day.
Over the next 5 years, Nvidia management anticipates a sharp rise in data center expenditures. Nvidia is establishing a number of strong alliances in order to capitalize. Considering its long-term growth rates, the stock isn't as costly as it appears. Since Nvidia is the biggest firm in the world, it seems like it has limited room for expansion. However, there are a number of strong arguments for why it's still a wise investment today. The development of artificial intelligence, AI, is far from finished, and it will be very difficult to unseat Nvidia as the industry leader. The reasons why Nvidia is a great investment are numerous. Here are 3 particular factors that make it an excellent long-term purchase. 1. Much more money will be spent on AI infrastructure. It appears that there isn't much more money that can be spent on AI data centers, as businesses are already spending billions of dollars on them every year. Nevertheless, the demand for AI is so great that the hyperscalers are continuing to invest more money in AI development. Nvidia anticipates that worldwide data center buildouts will reach $3 trillion to $4 trillion by 2030, with total capital expenditures for data centers hitting $600 billion this year. Although that is a significant increase, is it feasible? The United States and China are now the only 2 nations making significant investments in AI technology. Nvidia is currently unable to access this enormous market, since it has not yet obtained the export licenses necessary to start selling to China. Furthermore, the demand for Nvidia's graphics processing units, GPUs, could skyrocket as Europe, another large economy, only now begins to recognize the AI trend. Data centers also take years to construct. It is likely that these companies are in close contact with Nvidia to guarantee that the computing units will be available when the time comes to install them, as the announcements this year regarding the data centers being built by the AI hyperscalers will take a few years to become operational. All of this is encouraging for Nvidia, and it is increasingly evident that the trend of AI computing power build-out is far from over. 2. Through collaborations, Nvidia is putting itself in a good position. In order to maintain its position at the forefront of the computing industry, Nvidia has also been actively establishing alliances. Nvidia recently revealed that it has agreed to provide OpenAI, the company behind ChatGPT, with 10 gigawatts of AI processing capacity. Through Nvidia's $100 billion investment, OpenAI is funding this, establishing Nvidia as an OpenAI partner. Nvidia is solidifying its position as the preferred computer supplier for one of the most significant AI startups by partnering with a pioneer in generative AI technology. Additionally, Nvidia is growing its product portfolio by investing $5 billion in Intel. This will increase Nvidia's ecosystem dominance by enabling it to design and construct CPUs that better control its GPUs. To boost its processing power, CoreWeave also obtained a $6.3 billion contract for Nvidia GPUs. Buying top-tier GPUs from Nvidia and renting them back to customers for their AI requirements is CoreWeave's business strategy. This partnership guarantees that a number of businesses will have to remain in the Nvidia ecosystem if they ever choose to construct on-premises, instead of renting through CoreWeave, because Nvidia GPUs are the greatest all-purpose computing equipment available. Nvidia has already established a number of solid partnerships, and it appears that these are just going to get stronger. The stock doesn't cost a lot of money. Even with all of Nvidia's achievements, the stock still doesn't seem particularly pricey. From a historical perspective, Nvidia's stock may appear expensive given that it is currently trading at 41 times forward earnings. Investors must take into account Nvidia's anticipated rate of growth, though. Maintaining its remarkable 40% to 50% sales growth per quarter over the coming years is not impossible, as Nvidia anticipates significant investment increase over the next 5 years. From a 5-year perspective, this makes Nvidia's stock appear reasonably priced, making it an excellent investment right now. Vijay Rakesh, a Mizuho analyst, reaffirmed his outperform rating and $2,500 price objective for the stock on September 24th. Nvidia's announcement of a $100 billion equity investment in OpenAI comes after the rating. The company pointed out how Nvidia's ownership of OpenAI, which will finance up to 10 GW of AI data center capacity, strengthens its position as the industry leader in GPUs and networking. Deployments are anticipated in 2H26E, and OpenAI may get the initial $10 billion in the coming months. Starting with the Vera Rubin NVL racks, which we anticipate launching in 2H26E, Nvidia announced a $100 billion equity investment in OpenAI to finance up to 10 GW of AI data center capacity. We think 1. Solidifying Nvidia's dominance in GPU networking, NVLink, LLM AI training, while securing demand outlook for 2026 to 27E with its largest customer. 2. The possibility of first deployments occurring in 2H26, with VR200 NVL1444 shipments. 3. the possibility that OpenAI will receive the initial $10 billion from Nvidia in the coming months following the official agreement, with the remaining $90 billion being dispersed as OpenAI ramps up new capacity. And 4, Nvidia had previously stated that it costs about $50 billion per GW of AI DC capacity, with about $35 billion going toward Nvidia infrastructure. As its biggest client keeps growing, the company reaffirmed outperform and sees the OpenAI agreement as Nvidia retaining its crucial leadership position in the merchant GPU industry. With the announcement of the most recent GeForce Now upgrade, Nvidia switched from RTX 4080 servers to Blackwell RTX 5080 SuperPods. According to the chipmaker, Ultimate-tier customers may anticipate lower latency, better bandwidth, and a wider selection of games, all of which are free of charge. With DLSS 4 and AI upscaling, the new Blackwell RTX 5080 SuperPods offer smoother performance and better graphics. Future titles like Dune, Awakening, Chronos, The New Dawn, and Clair Obscur Expedition 33 will showcase the GPU's capabilities, the company claimed. More members will be able to experience cutting-edge streaming capabilities on a variety of devices, including PCs, Macs, Chromebooks, LG TVs, and Steam Decks, as Blackwell RTX servers become available globally. Artificial General Intelligence, AGI, and maybe Artificial Superintelligence, ASI, will be the next major advancements in AI technology, following generative AI, which is now being embraced at a rapid pace. Although AI researchers anticipate that AGI will be realized by 2045, AI entrepreneurs believe it will be accomplished by 2030. For businesses vying for AGI and ASI, Nvidia's technology is essential. If you have been eyeing Nvidia stock and believe you have lost out on investing in the titan of artificial intelligence, AI technology, don't worry. The stock of Nvidia still has a tremendous deal of room to expand in the future. The sustained high demand for Nvidia's graphics processing units, GPUs, and associated technology to support generative AI will be the company's primary growth engine for some time to come. With the release of OpenAI's ChatGPT chatbot in late 2022, generative AI became the buzzword of the tech industry. Customer service operations, autonomous cars, and the initial phases of creating practical humanoid robots are a few particular uses of generative AI that will support this expansion. However, a topic that receives little attention will be the main engine of Nvidia's long-term growth, the competition to develop artificial general intelligence, AGI, and subsequently artificial superintelligence, ASI. You might imagine a continuum from artificial general intelligence, AGI, to artificial superintelligence, ASI, to generative AI, which is the kind of AI that is currently being embraced at a rapid pace. Generative AI is a significant technological advancement with incredible potential. Pattern recognition and other pragmatic thinking skills are among its strong points. However, it falls short of genuine innovation and critical thinking at the human level. Given that generative AI is educated on data that already exists in the world, this is not surprising. Furthermore, AI hallucinations, or inaccurate or deceptive findings presented with confidence, can occur in even the strongest generative AI models. The next major technical advancement will be the transition from generative AI to AGI. Artificial General Intelligence, AGI, is capable of doing almost all cognitive activities at least as well as the typical human. The term artificial superintelligence makes it clear what it means. In almost every cognitive task, this technology will be superintelligent or noticeably smarter than even the most bright people. Most AI researchers think that AGI will eventually be achieved. According to a recent macro analysis by research firm AI Multiple, the average AI expert predicts that AGI will be developed in 15 years, or by 2040. The average projection was 2060 prior to the introduction of generative AI-powered AI models, which began in late 2022. This statistic demonstrates how much AI's capabilities were enhanced with the introduction of generative AI. The analysis also found that entrepreneurs are even more hopeful. They estimate that AGI will be attained in 2030 or just 5 years on average. Since the development of artificial superintelligence is still a ways off, forecasts are not very useful. As of right now, Nvidia's hegemony in the global AI semiconductor, or chip, market indicates that its GPUs and related technology are essential for businesses hoping to attain AGI and ASI. Alphabet, Amazon, Apple, Meta Platforms, Microsoft, Tesla, and other major tech firms, as well as OpenAI and numerous other AI-native startups, are probably among these businesses. Let's talk about something that Nvidia stock bears like to bring up. Tesla and all of the major tech companies have created or are creating their own AI chips. These are used internally and occasionally in their cloud computing services, which also provide GPUs from Nvidia. However, these chips are only suitable for particular applications, as indicated by their category name, Application-Specific Integrated Circuits, ASICs. In general, GPUs, and Nvidia's GPUs specifically, remain the industry standard for training AI models and implementing AI applications. Furthermore, there is little sign that Nvidia's hegemony over this enormous and quickly expanding market will be challenged very soon. In order to train and run its next generation of models on the way to deploying superintelligence, OpenAI and Nvidia intend to install at least 10 gigawatts of Nvidia systems for OpenAI's next-generation AI infrastructure. To put it in perspective, $100 billion is almost twice as much cash and equivalents as Nvidia had at the end of the last quarter that was published. Additionally, it has more cash and equivalents than any of the other Magnificent Seven companies, Microsoft, Tesla, Amazon, Apple, Meta Platforms, and Alphabet. This does not imply that Nvidia will spend all of its money. The investment in OpenAI will span several years. Additionally, Nvidia produces strong cash flows. Its operating cash flow for the previous year was $77 billion. Because tech billionaires are fiercely competitive, Nvidia's significant projected investment in OpenAI should hasten the pursuit of AGI and ASI. And when businesses aggressively invest even more money in purchasing Nvidia's AI-enabling infrastructure, this will help Nvidia and its stock. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.